Welcome to CurrencyCast. What are treasury managers' priorities for 2025? And how should corporate FX risk managers prepare for the year ahead? Welcome to CurrencyCast. My name is Agustin McKinley. I'm the senior financial writer at Cantox and your host. In this episode, we have the pleasure to welcome François Masquelier. François needs no introduction. He's a very well-known figure in treasury management, both in Europe and globally. He is the creator of the Treasury Tech Map that we're going to discuss. He is also the editor of Journeys to Treasury and the CEO of Simply Treasury. If that wasn't enough, he is the head of the European Association of Corporate Treasurers, the EACT. So François, a very warm welcome to you and thank you for joining us in this episode of CurrencyCast.
Thanks for your invitation, Agustin.
All right, let's start right away with priorities for 2025. Tell us a little bit, François, how do you see treasurers' priorities in the year ahead, perhaps based on the results of your latest EACT survey?
Yeah. No, we run at EACT a survey once a year in the first quarter of the year. So we will launch very soon in January, I guess, the next one. But the question addressed in the 24 survey, and it's the same question year on year, so we can see the trends. And according to the survey of 24, so let's say 3 quarters ago, the priorities for the next 12 to 24 months, what was the view for 25-26, was the following. So if I want to list the priorities, and then I will comment what could shift, because year on year you can have some shift in the priorities. So it was long-term funding, but we understand why, because we know that a lot of companies were about to refinance the company, and with high interest rate, it was really a key issue that popped up at the first place. The second one, no surprise, is still cash flow forecasting, highly ranked, and I guess that cash flow forecasting will remain in the top 3 for 25 for sure. Capital structure also again linked to the funding. They need to have a better capital structure, a better proportion of equity. And by the way, it's one of the priority of von der Leyen Commission 2, Capital Market Union. We would like to be less dependent on bank borrowings and use more the capital markets. It will be a great challenge for the next 5 years for the Commission. And by the way, it was underlined in the Draghi report. And in fourth position, it comes maybe to Cantox and currency management automation, is the digitalization of treasury. So after years where we were simply updating our treasury management system by changing, it was all standing and very, very outdated solution. Sometimes people keep the same TMS for 10, 15, 20 years. Some are still on premise. So they had to move to SaaS solution and they took the opportunity to upgrade the system. Now they have a new TMS or a newer TMS, I would say, normally in SaaS mode. And comes the question, how can I go to the next stage, the next level of digitization, what I prefer sometimes to call automation or hyper-automation. So
Right.
highly ranked. And we see that then the working capital, bank relationship quite important, technology, etc. So we have a lot of things, and I guess we will have also opportunity to talk about the political issue. That's the major things. If you ask me what will be my, let's say, prediction for the result of 25, I would say that cash flow forecasting will be high. I guess that the market risk, including FX, will be higher ranked because of the volatility of the market. And maybe because of the, let's say, reduction of interest rate, it's possible that funding or refinancing of the company will come down. So we could have digitization coming upper in the ranking, cash flow forecasting still up, and market risk higher due to the volatility of the market and the economic and geopolitical environment, I would say.
Yes, of course. Now, François, I have a bit of an issue with neatly separating one priority from the other because it might lead to a sense of siloed management. And so, for example, can you neatly separate foreign exchange risk management, say, from liquidity management? There are overlapping themes there, say, swap execution, collateral optimization, and even if you sell in the currencies of your customers and hedge the corresponding exposure, well, you might reduce the credit risk in your receivables. So is it possible to really neatly separate those priorities?
No, I totally agree. When we raise and we address the question, we need to identify priority by priority. By the way, when you look at with, let's say, more detail, you refine or you focus, you see that the results are very, very close. So the priorities are very close to each other. But you're right. There is a high correlation between, let's say, priorities. If you take, for example, the cash flow forecasting. Cash flow forecasting, per definition, include also the FX risk. And of course, in the cash flow forecasting, it's a commodity risk. So it's really connected. And together, if you want to improve the accuracy of cash flow forecasting, you need a better digitization, better API, better, let's say, straight-through processes and connection, connectivity, etc. And when you look at the funding, capital structure, bank relationship, everything is more connected than it looks. So
yes, absolutely.
That's right. So it's difficult we sign up for the beauty of the survey, but in reality, it's more correlated and it makes our life more complicated because when we have a risk, we need to consider that the risk could be, let's say, added to some others. When we talk, for example, the digitalization of treasury, it's so important today to enhance the internal controls, to automate the processes, because we saw a lot of frauds and a lot of errors because of the excess use of Excel spreadsheets. So you're right, it's maybe more connected and correlated than it looks when you look at the result of the survey.
Right. Now, François, there's, of course, news, and the big news is the election of Donald Trump as the 47th President of the United States of America. Now, does that change in any way your perception of treasurers' priorities for the year ahead? We know that Mr. Trump has been very vocal in terms of increasing tariffs. There's talk of a 20% tariff across the board, 60% tariffs on all goods from China into the United States, and recently even a somewhat direct threat to Canada, to Mexico, to China, and that had created a bit of volatility. So, does that election change in any way, you think, the priorities, or was it already discounted by participants?
I don't. It's one of the elements of the geopolitical risk we've mentioned, ranked number 8, if I'm correct, in the 24 survey. To answer your question, because there are many questions in your question, so I think that it was highly anticipated by the market. I remember I went to a conference about 3 months ago, roughly, and one of the economists was predicting a very easy victory of Donald Trump, and he was right. So I think that I don't want to talk about the politics because that's not the purpose of this podcast, but just in terms of economics and impact for corporate treasurers and CFOs, I would say that so far we should not complain. The market are doing quite well. For America, I think it's good news. So they will keep, let's say, pushing the economy. You see the results. So I won't be surprised to have an increase of interest rate, and I'm not expecting a decrease of interest rate. So it means that we could have a high delta of interest rate, so a high differential of interest rate, what is not good for us, and a strong dollar and more volatility. The major consequence for us, and it's already anticipated by the market, is the higher volatility, higher uncertainty. However, we could expect that it could maybe help, let's say, giving an end to this war in Ukraine, maybe to accelerate the processes in Lebanon and Gaza. So I think that there are some economical good news. Again, I don't want to comment the political aspect. It's not my purpose. But in terms of economic, let's say, impact for us as corporate treasurers and CFO, I think that it's okay, and we don't have a lot of surprise. I would say, I'm always surprised by the resilience of our economies, because when you see the situation, we have a huge quantity of bad news, and still we are there, and we are still, let's say, doing quite well, and resisting. So I'm really surprised by this resilience of the economy, and again, for me, has been already discounted. It will only create more volatility and therefore more reason to consider, let's say, increasing the hedging strategy, or just to be better protected. That could have an impact on the strategies. But all in, I do not expect a lot of things. Of course, the war on the tariffs could have an impact, here and there, depending on your economy. So better not to be a producer of cognac in France. I cannot tell you, but I think that I'm sure that the pendulum will come back. And it was not the first time. If you remember, the first mandate of Mr. Trump was also a war. They were predicting a currency war. It was still okay. So I'm not too pessimistic, I would say.
Right. I think we can agree that the results were largely discounted by participants, right? But still, there's I wanted to draw your attention to a piece that was published by the Financial Times weekend edition, citing sources from the Chinese government that they are giving instructions to state-owned banks, big banks, of course, there in China, to train corporate managers in foreign exchange hedging. So my reaction when I read that piece was, really, we're living in quite extraordinary times for foreign exchange risk managers. Just imagine that what is going to happen there if the Chinese government instructs more training in foreign exchange risk management. Just from that point of view, I think we're living in extraordinary times. Also, let's switch gears a little bit and discuss in more detail treasury technology and outlook for 2025 and beyond. So I wanted to ask you about the treasury tech map, and tell us a little bit how the idea came about. Tell us how you update the treasury tech map. Where do you publish it? And of course, this is every time we see it at Cantos, we're really glad to see currency management automation featured alongside the likes of ERP and TMS. So tell us a lot about your creation there.
Let's give a sort of a background and a picture. So it started about 3 years ago, and so I remember discussion with a lot of IT vendors, also with investors, family offices, VCs, and I realized once that some of these investors make confusion between solutions. They say, is it the FX platform? Is it the currency management automation? Is it a system to value a portfolio of a complex product, financial instrument? Is it a solution for commodity hedging? So they mix the things, and for the investors, it's not clear. It's really opaque and quite difficult to find a way. But even for us as corporate treasurers, as we mentioned, we are quite busy. It's difficult these days to hire new people. Corporate treasurers have a lot of focus, a lot of challenges, as we mentioned. Look at the priorities. We face the COVID, a lot of crises, wars, etc. So we don't have time to dedicate to the search or what will be the solution we should consider and contemplate. So my first idea was to say, why not having a sort of cartography of all the solutions? But what was quite new is the fact that I've tried to separate the categories. To say, okay, let's try, because for a lot of people, it was treasury management solution. In a way, everything is a treasury management solution, but not as defined with the acronym TMS. TMS is really a sort of database of all the financial instruments a company will use. So Treasury management system and ERP are the two backbone of the treasury organization. But around these tools, and because it's more and more SaaS and more pret-a-porter solution rather than tailor-made solution, it's important to add satellite and to complement the solution to make sure that we can cover the whole change of needs. For example, if you need a bank guarantee tool to manage the guarantees because you have more than, I don't know, 100 or 1,000 guarantees, on Excel it's quite difficult to track the guarantees across the world, so you need some tools. But guess that the TMS are not doing that, so you need to find an extra tool and to plug it. So the same for the bank connectivity, you need to plug it to a TMS. Same for currency management automation, you bring things that are missing in the TMS. So a lot of people have the impression that the TMS is like a robot in your kitchen doing everything. No, it does a certain part. And the fact that it's more and more SaaS, more and more out-of-the-shelf solutions, mean that you cannot tailor-made. You need to adapt to the process of the system and to follow the feature of the system. And you have a lot of gaps in the system. So my idea was to say, okay, let's have a better view on the two backbone and what is around that. And as I said, it's a jungle of solutions. So you have to, I think I have 300 names on my map. And every day, every conference, I was in Paris for the EACT conference last week, and the week before in Bologna for the Italian conference. I can tell you each time I discover a solution that I've never seen in my life. So if it's the case for me, guess that for the majority of my peers, should be the same. So you need to I wanted to give a sort of tool to say, okay, that's the sort of world map, all the countries, all the continents, and if you want to focus, you can focus. I would like to find a solution doing that or that. You can go more precisely in the category to focus to see the different actors with a sort of, let's say, a technical sheet, giving some information about the company, about what they do. Potentially, they could be in different categories. For example, if I take SAP, ION, FIS, they will be, of course, in different categories. But the idea was really to give a tool to better pre-select the solution or the solutions you need for treasury by categorizing the solutions. And the idea will be to update it, and that's difficult because the logo are changing. You have a concentration in the sector. Sometimes you change the name, or you have different products, different branding, etc. If I take the example of ION, you have different brandings. So it's important to make sure that you can track that and give an updated information. So it's a lot of work. And my idea, recently I've had a category called PSP for the payment service providers, because you have a lot of new players like Visa, MasterCard, a lot of companies or banks like Revolut, etc. So it's important to, and I will continue to add categories just to make sure that we can refine more and more. And so the 2D map became in the meantime, meanwhile, a website, and it's treasurymap.com. Go and visit it. It's free. I wanted also to have a tool that is free for corporates and for the buy and sell side, I would say. Something that could be, let's say, open and visible for anyone, and in English, just to make sure that everyone could find information. So the challenge for me will be to maintain, to keep updating and feeding. And yesterday I was looking at the 2 new solutions I discovered. So I need to contact the solution to make sure that they fit, they are interested, and to put it on the map, just to give a broader, I'd like to be as comprehensive as possible, but you can imagine it's a challenge, and I don't claim to be fully exhaustive, but I try to gather the most, let's say, or the key information. And the good news, it has been endorsed by the EACT, and we try to see how we can, let's say, guarantee and ensure the quality of. Again, my idea is not to claim that this solution is better than the others. I try to be comprehensive and to give information to my peers, but certainly not to judge what are the good and the bad solutions. So that's the idea. It's not the objective of the map. It's just to record and to have a database, but it's not a tool to. I'm not the lead Mishnah of the solution. It's not the purpose.
Right. Well, and as you said, I take 2 things from what you just said. First, a huge challenge, and but very, very useful for everyone involved in treasury tech and in treasury management in general. And the second point I take is, you mentioned that so those extra tools that complement the work of a treasury management system, and that's how we see a currency management automation. So
Yeah.
when I discussed this issue with our engineers, and what really is noticeable, I think, is that currency management automation, well, because it provides API-based real-time connectivity, it allows for what we call monitoring the markets. And that expression means a lot, because it allows you as a treasurer to, while keeping all your exposure under active management, well, to delay the execution of hedges, giving you more time to update your cash flow forecasts, and to lower concerns about forecast accuracy when you do so. It allows you also to reduce the cost of hedging when you're facing unfavorable forward points, right? When you sell in a currency that trades at a forward discount, or when you buy and hedge in a currency that trades at a forward premium. It also allows you to, well, maybe to uncover exposure netting opportunities and other potential benefits in collateral optimization, and even, if you're lucky, to hit a take profit order and book an unexpected gain. What is your view there? The difference between, how does a currency management automation solutions complement, as you said in your words, the work of a treasury management system?
Yeah. So, but as I say, and I wrote a lot on that because it's really for me a key topic. So the treasury management system are what they are, and they're quite great with different features. And of course, you can record the FX, in your case, the FX financial instrument, but it's a tool that unfortunately is not covering what the currency management automation intend to do. So the idea of the map was to put a name or an acronym on the different categories to make sure that we make a distinction. But to come to your point, it's because the TMS claim that they are a decision-making tool, but when you think about it, they just record, it's a sort of database of financial instruments. They give you some report, and by analyzing the report, you can come to a decision and apply and respect the policy. But it's not proposing and doing the things for you. And it's why I like to talk about automation and hyper-automation. So why not automating this part of the FX management and do things that the TMS is not there to do? For example, a TMS is not there to execute when you are not working. It can work 24/7. I think it's quite important because these days we see the volatility of the market. So first, the machine could do the job 24/7. Then, so being more accurate and let's say hedge a risk when it is identified. In the TMS, you don't have this pre-trade phase because you need to link to other tools to get the information, because the underlying exposure, it's not managed in the TMS. What is managed in the TMS in the best case, it's the hedge relationship where we link to the underlying exposure, but you don't have a link to the the source of the exposure. That could be depending on your underlying industries. But if you are an airline company, I guess you will have a portfolio of commodities and jet fuels. If you are a producer of Ferrero, you have, producers of cacao or chocolates, etc. You need to link to your purchase, your sales, if you sell software, etc. So that's the kind of thing. So you have tools for managing the underlying risk, and it should be interface, because the sooner you get the information, the faster you hedge. And again, what is the value added for the company and for the treasury department? And I've mentioned the lack of resources and the small team in rollovering hedging, in hedging position, especially when you apply a one-to-one approach. So it's a lot of deals, and doing 1, 10, 30 deals on a platform, I don't know, but it's not really something important. And with the machine and with the platforms, you can execute and get the best execution. as good as if you were doing that manually or even with a phone. So I think that what is quite important is not to lose time in doing this kind of operation. Is to let the machine doing that 24/7. Again, when you have bank holidays, your risk is still there. You cannot wait a weekend or a long weekend, Thanksgiving, and just discover that the dollars are one or two figures up. So before reacting. So I think the machine is very good because it's virtuous. And coming back to the point of lack of resources, difficulty to increase your team because an FT is difficult to get when you have a growing business with a lot of challenges. I think that automation is the best way to, on one hand, to increase your or enhance your internal control, to reduce your risk of error or fraud or whatever, and also to free some time to do the analysis. What we are missing today, and it's one of my perception, treasury management system are not decision-making tools. They help you to take some decision by providing some report. But with AI and with a new technology, we can expect that the machine will go a step further, execute the operation for you. You will be just supervising the operation, then produce some report, crunch figures, and propose something that could be a step further. And with Gen AI, we have a lot of potential. But we are not at that stage, and it's why, to come to your point, I think that a TMS, it's great, but it has some, let's say, lack or gaps. And we need to complement by adding some options here and there to make sure that we can fulfill the needs of the company.
Right. Well, absolutely agree. And I was forgetting when I mentioned those ways to complement a TMS with currency management automation, pricing with an FX, or making those combinations of hedging programs or hedging cash flow programs. Also, let's again, if you don't mind, switch a little bit gears, and I'm interested also in knowing a little bit more about the Journeys to Treasury, that publication that you edit. So tell us a little bit more about the latest issue, and perhaps in particular with that last section, which was so interesting about you having gathered a team of Treasury professionals to try and assess potential users of Gen AI or generative artificial intelligence in treasury operations. Tell us more about this.
First, Journey to Treasury, we published at the occasion of the Year of Finance in Copenhagen. We produced the 9th edition, so we are already working quite hard on the 10th edition, and we will celebrate it. It's a combination of 4, let's say, main actors. PwC on one side, with a leading treasury practice, as we know worldwide. SAP, the largest tech company in Europe, and the BNP Paribas, the first bank of cash management in Europe from far, together with the EACT. And the idea was, okay, let's combine advisory, IT, banks, and treasury, and think what are the leading, let's say, or innovative solutions. So for the last 9 years, we've tried to identify these interesting case studies, and you see year on year the new technology deployed and the progress a lot of companies are doing. And what we like is also the idea of co-creation. And then when it comes to last year, we thought, okay, maybe we should focus more on AI, Gen AI, and the new technology, so the idea of hyper-automation. And we try to brainstorm, so to gather a group of end users, corporates, together with SAP, BNP, as I said, and PwC, and to work together, because AI or Gen AI, it's a great technology, but it's not yet offering or proposing the full potential of the tool. So we are really at the early stage of the development. I think it will take more time than what we expect. It's like the flying cars and or cars without drivers. So it takes more time than what we thought initially, but it's coming. And the idea was to see what are the areas where it already works quite well, like for cash flow forecasting, like for fraud detection, sanction screening, this kind of thing that could be repetitive and requires the use of the machine because the machine is much more performing. And of course, FX management is also a good example where you can automate the execution, follow some pattern, apply some policy like what you propose with the currency management automation. So we define a policy or different policies, different strategies, different regions, and you can, let's say, combine everything and the machine is working for you, including the production of reporting and let's say crunch figure, because working capital is also a good area where we see potentially, it's quite promising because we see a huge interest from corporates because we produce easily figures, data, but we don't have time to analyze it, to see the trend and to detect in ratios what is coming from what reason, what source, and to try to find the source and the springs of these problems. We think that in payment, in wallet sizing, also KYC, we have a lot of progress to do, and the machine will certainly bring a lot of, let's say, hope, and we have a high expectation on that. Everything that could be that is more routine operations, and FX is a good example because sometimes you roll over a portfolio because you don't need the currency right now, but you postpone the deal, so you need to make a rollover. It's the kind of thing where a machine could do the things much more efficiently and faster than corporates. Trading is also important. So for those trading and for the execution of operation, for producing the report, if we talk about IFRS, hedge accounting, so it's a lot of document and support, so that could be good. AI could also be used for training, for training teams, because we need also to train the team. You mentioned the currency issue in China, so we need to train the team to explain what we do, and so we have better to train the team than to just execute data aggregation, exposure identification. So we have identified a lot of areas where we see that we have high potential. Right. So what we plan to do is to continue next year to have these working groups, and I hope that Kentox will be involved in this group to keep working and try to define where we can find, because we as corporates, we can complain that we don't have the right solution, but why not participating to the design and the creation of the solution? That's a bit the idea we try to do. And what we have also tried to do is to map and to explain where we see that there is high value, quick wins, longer term wins, and that's a long way, but we are pleased to have initiated this group. So Journey to Treasury, it's not only a document you can download on the Journey to Treasury website, by the way. It's more than that. We have some webinars, and we try to have a journey.
It's alive, sort of, right? It is a continued process.
Exactly. So because we see that in the coming years, the first time we talk about AI in this document, it was if my memory is correct, 4 years ago with SAP, Givaudan in Switzerland, they were using AI for cash flow forecasting. But in the main one, the technology has made a lot of progress. The machines are also learning, and we are doing much better. But it's interesting to see the technical and innovation evolution over years, and that the beauty of this document, as the survey, for example, it's similar. You can see the trends over the year and the new things. So the idea is really to show to our members that there are some interesting case studies, and these leading case studies could tomorrow will be democratized and used for any type of corporates. So the co-creation, and BNP is one of the leaders in co-creation. I like that because you have a problem, we try to find a solution. When it's fixed, maybe we can deploy and roll out the solution across all customers.
Right, really interesting. You mentioned some users that might have, although we're still not really seeing that much, but an impact on foreign exchange risk management, such as exposure collection perhaps, and the budgeting process. Why not? And when it comes to the idea that Gen AI is going to allow our managers to arrive at more accurate cash flow forecasts, then we tend to have a somewhat or slightly out of consensus view. We think that at least when it comes to currency management, right? Maybe not in other areas, but in currency management,
Yeah.
the importance of having super accurate cash flow forecasts is somewhat overstated. If you take the example, just two examples, in a say in when you hedge firm commitments or invoices, well, there the probability of occurrence is pretty high, and you don't really are that dependent on your cash flow forecast. Of course, automation there will help a lot. And in layered hedging programs, the purpose is right from the start to build, so to speak, the hedge rate in advance. So exactly to match that idea that of the risk of over hedging or under hedging. So that's a slightly out of consensus view. But how do you see that?
No, I totally agree. So the paradox, while we try to have a more accurate cash flow forecasting for obvious reason, to define what will be the level of indebtedness, what is the debt capacity of a company, what will be the cost of funding. So that's the idea of the cash flow forecasting, and also for the investors, for the end users. So of course, if you're a listed company, you need to pause on a quarter to give some indication of the evolution. But beside that, I totally agree that for the FX, the paradox is that we don't need this degree of accuracy, because per definition, FX, we have different type of risk. But if you just take the transactional risk, of course you will hedge, but the idea is not to hedge 200%, because we know that we have a certain degree of uncertainty, and we mentioned some of the risk with the tariff wars, etc. So per definition, when you hedge cash flow, you know that the cash flow it's a variable. So we corporates usually, for the on-balance sheet exposure, we hedge it at 100% because it's on balance sheet. So that's obvious. If it's not hedged, you will have fluctuation at any, let's say, closing. For the off-balance sheet exposure, you have different time. What it is, let's say, confirmed by a firm commitment when you have a contract that is considered a firm commitment according to IFRS rules and IFRS 9. Of course, you can hedge up to 100%, but the idea is not to cover the next 10 years of exposure. Maybe you have a gradual approach, because I don't know where the dollar or euro will be in 10 years. So you need to respect your policy, and the policy could also be driven by the risk appetite of the company. Are you publicly listed or not? Are you a European or US company? It's very cultural, depends on the risk appetite. And then you have all this, let's say, highly probable transaction or cash flow forecasting. So you know that year on year you have a turnover revenues of that level in foreign currencies, but it's extremely difficult to define that. And again, we are just talking about the transactional risk. We're not talking about translation risk. So it's extremely difficult. And it's why I think it's good to have a certain accuracy, to know where you stand. But per definition, if you want to go too far in hedging your cash flow forecast, if it's not fully accurate, if you cannot achieve the cash flow forecasting, even if it's highly probable, the risk is to be overhedged. And being overhedged, it's not better than to be underhedged. So again, the policies, and I've very seldom seen policy where the CFO saying you should hedge 100% of the cash flow forecast, fund commitment, off-balance sheet commitment, etc. So it's extremely difficult. So you need to find a strategy. You mentioned the layer strategy, the budget strategy, where you try to build your position over time just to benefit and to build your, let's say, position according to the evolution of your turnover. I think it's a good approach. I've never seen a policy where if you are too aggressive, the risk is to be overhedged, because these days, and we saw that, you remember, when we have some lack in the financial supply chain, chips were not produced in China, so we had cars without the chip. So some of the options on your car were, let's say, stopped, or they say, okay, I sell you a car, but you will open the roof in 1 year when we have the chip for your car. So we had a lack of supply. You remember the commodities price were going to the roof. So that kind of situation could create a risk, and if the underlying risk it's let's say cancelled, the material won't be delivered, so you can be overhead. So it's always good to keep this buffer for the CFO and the treasurer to make sure that you can maybe potentially reallocate some hedging or are not in a position where you are being overhedged, because again, overhedge is not better than to be
Right,
overhedged.
of course. So we're running out of time here. I want just to maybe finish this conversation with one comment on your part. It's based on something that I saw recently, the earnings results of EasyJet, the airline, which were pretty stunning, as they announced 630 million pounds in pre-tax profits for 12 years, so up to September 2024. But at the same time, they mentioned that foreign exchange had not been an issue. In other words, that the performance was stable, and also in the same document, they appear to show what is a layered hedging program, as already the first half of 2026, the forecast is hedged at 26%, which seems to indicate, but maybe it's not the case, but it seems to indicate a sort of a link between good FX risk management and reducing performance variability. So here's my question, and with that, we're going to finish. Isn't that precisely the role of corporate treasurers, of CFOs, in their capacity as FX risk managers, namely to enhance the value of the firm instead of worrying about saving one additional pip in trading costs?
Yeah, no, I totally agree. We should not forget that corporate treasury could create and generate the value, and so the idea is, of course, at the end of the day, to protect the margin. And if you are selling flights and tickets, so the idea is to protect your margin. So the idea is not to create value by speculating on the FX and to make an FX result, but to make sure that you have no FX result. In the case of EasyJet, I don't know what is the functional currency of EasyJet, but it is sterling point. I get that they could have some impact on the result, maybe positive if we have weak sterling when it comes to translation. But I can imagine that they were properly hedged, and if they are properly hedged, it can be reflected in the margin, and again come to the situation where you can create value by having the right policy properly applied. Because one thing is to have a good policy, a good strategy, to have a flexible and adaptable strategy, because it should not be frozen for years, and to make sure that you apply the strategy properly and in real time. And it's why currency management automation will certainly help. If you want to create value, you need to act faster and to automate your processes. That's when I see companies having some added value in FX, it's because they are properly managing FX and with the right tools to make sure that they identify as soon as possible the risk, they communicate fast the information, and they can work 24/7 across the globe to protect the margin. Yeah. And I'm not surprised by that. So excellent result, but it's certainly due to the right management of treasury. But we should not forget, we say treasury management, there is a notion of managing, so you need to monitor. If we treasurer are not doing anything, so we are just there to take more time, step back and say, okay, that's the result. How can I bring value? Where can we adapt the policy to make sure? Because again, it should not be frozen. The market is moving too fast. We mentioned the geopolitical risk, so you need to be adaptable. One of the major qualities for corporate treasury, for good modern treasurers, is to be adaptable, flexible, to react, and to be proactive. So I think it's certainly the case today. Yeah.
Absolutely. Well, François Masquelier, head of the or chair, right, of the EACT, the European Association of Corporate Treasurers, CFO of Simply Treasury. We've covered a lot of topics. We started with the priorities for 2025. We moved on a little bit to geopolitics, the election of Donald Trump as the 47th President of the United States. We went on with some degree of detail to discuss Treasury Tech Map and TMS, treasury management systems, and currency management automation, we move to the subject of the journeys to treasury publication and that special task force on AI, Gen AI applications in treasury management. And we concluded with some remarks on the strategic role of treasury managers and FX risk managers in general. So thank you very much for joining us today on CurrencyCast, and I'm sure we'll be in touch, and you will come back to the podcast in 2025.
Yeah, maybe to talk about the result of the 25 survey. I would be pleased to disclose that, and I really encourage the listener and you contact to answer the survey. So it's quite important to feel what are the trend in the market. But I will be pleased to come and share the result with you.
All right. Thank you very much and goodbye.
Okay. Thank you.